It's Brian Preston, the Money Guy.
One of the things we love about what we're able to do here on the show is share positive, optimistic ways to do exactly what you talk about in all your stuff. How do you stretch your dollars farther? How do you take your dollars a little bit longer? And what's beautiful is we have a live chat going right now, and they're just feeding us questions, right? And so I have questions coming in. So what I want to do is I want you to
the
weigh
one
in.
that I'm most likely not to have any idea how to answer
all right,
first.
There's some pressure right there.
There's some unique ones in here around like Burger King and that sort of thing. But here's the one I'm going to start with. This first question is from Andrew. And Andrew said, right now with what's going on in the world, is it better to refinance money from my house to do some work on it, like a cash out refinance, or to get a home equity line of credit, right? So how do I approach making that decision in this market?
So this is a difficult time to do home reno. And if you can actually wait till interest rates provide some of a break on the demand, finding home improvement contractors and the supplies for home improvement will make the overall job cheaper. Mm-hmm. So the first thing I'd say, this is a time to go on buyer's strike for doing the reno to your home. Okay. Give that a little time. But then to the question asked about doing the HELOC or doing a cash out refi, the question is, how long will it take you to pay off the money that you would be borrowing for this job? If you can pay it off in 36 months or less, do the HELOC, because the HELOC is very sensitive to the immediacy of the rising interest rates. But if you can pay it off in 3 years or less, then it's better not to take on new 30-year debt against your life by taking out a cash out refi. But the other thing is credit unions offer a somewhat unique product called a home equity loan that if you borrow money for 5 years, you can lock it in at a fixed rate. So you got 60 months.
So it's not subjected to the rising interest rates.
Exactly. And it's something banks won't do, but credit unions are owned by and for the benefit of their members. So they offer this vastly superior product to what the banks do with the floating rate HELOCs, where you have a specific purpose, like you're doing work to your home. And some credit unions will let you stretch it out 10 or 15 years, but that's really a disaster because the rates go a lot higher. But the 5-year home equity loan at a fixed rate is the sweet spot for home improvements.
And so if someone was wanting to approach a local credit union, are the rates competitive with fixed rate mortgages?
What's great is you can go look at their websites and you see what are they doing for people, and they'll show a range based on credit score. And they'll show you what they're doing 5-year home equity loans for. And then credit unions, not all of them have the ability to join just by breathing, but a lot do, or community credit unions, or you're a member of something that you can be a member of that credit union. And then you can make that match game and get that really great rate from the credit union on a 5-year cycle.
The only thing I would add is that refinancing can be expensive, but home equity lines of credit, the HELOCs, as well as those credit union loans, typically have a much more competitive price point if they're not even just doing it all for you just to give you access to it than a traditional refinance. And the only way you can make a traditional refinance affordable is take a premium on the rate. And when rates are already going up, that's probably not as viable.
I completely missed that point that your existing mortgage is almost certainly at a lower rate than what you can refi now with the rising interest rates. So again, doing the cordoned off separate borrowing is a much better thing. But the best thing of all is sit on your hands right now. You're living in your home. It may not be exactly what you want, but wait for the market to become less overheated.
I'm noticing a trend with cars we talked about, with houses. You kind of just need to stand in place if you can stand it until this market settles back into something a little more sustainable.
I mean, one of the things about capitalism is we go through economic cycles. What's different in this case, it doesn't matter if it's a dictatorship, a controlled government, a free economy like ours, that everybody is having the same cost pressures pretty much around the world. All based on the stuff that happened with COVID. It was kind of like they put this stuff in the oven, and instead of the cake rising perfectly, the cake exploded. And that's what's happened to everybody around the world. And you just got to let things settle down. You got to let the oven get clean, and then you can cook again.